All right. Good morning, everyone. Thank you for joining us today. My name is Andrea Scheidley. I'm the AVP of DI Sales, and I have Jeff Wilson that you can see. He's our Eastern Region DI Sales Manager. And then also we have Ross Garrett from Barron Insurance Group and Mike Bertalone with Farm Family. So we thank you both very much for participating today. What we're going to talk about is cross-selling from P&C to disability income. We've done a few surveys over the last year. What we've really learned is that agents like to learn from other agents. You don't want to listen to me or Jeff just get up here and talk the whole time and do a PowerPoint presentation. So we had our first best practices forum in April and had great response, great participation. So we're hoping that we'll have the same thing again today. Just kind of a few notes. Karen Luciano, she is the Eastern Region internal sales rep. She is on the call as well. She's going to help manage the questions function for us. So you can feel free to ask questions throughout, and Karen will help answer those for you. But then at the end, we'll do another Q&A, and I'll ask those questions out loud to Ross and to Mike, or Jeff and I can help answer them as well. So thanks so much for participating. We'll go ahead and get started. Ross, do you want to start with giving a little background on your time in the industry and what you focus on?
Yeah, absolutely. I work at Barron Insurance Group in Manheim, Pennsylvania, which is close to the Lancaster area for those of you that are familiar. I am actually looking forward to even learning from Mike today, as I'm still fairly new to the industry. I have been in the insurance industry now for 3.5 years. I owe a really great team at Barron probably a ton of credit for unleashing me in the areas that I probably am most gifted and covering most of my weaknesses. So I have found, I think, some success in the early going in the first 3.5 years. I'm very humbled to be a part of this call today, knowing that there's hopefully many years ahead of me to still get better at all of this. And my role within our agency is I am the director of P&C. So property and casualty, both over commercial lines and personal lines. I primarily do client-based work at this point with life insurance and disability insurance, but still get involved in the actual P&C client work as well, as much as is needed.
Great, thank you. And Mike, how about you? Would you give a quick background for you?
Okay, I'll try to be quick. So I've been around for a little while. In fact, I think I've been around longer than I haven't in the insurance business. I started in 1982 with a life insurance company from Boston, John Hancock, and they were a big player in the disability world years ago. So that's where I learned the use of disability insurance. I eventually, and I used to make as a comment in those days that property and casualty was 10% of my income and 90% of my problems. And somehow I ended up almost totally in the property and casualty business. I don't know why. I just wanted to punish myself, I guess. But what's happened is I found disability is a very important product to add in the property and casualty world. I'm now primarily in agricultural and green industries. So landscapers, arborists, people that grow things, or in the equine world. So disability works great in those industries.
Absolutely. Perfect market for us there. Well, thank you both for that. And again, I love seeing the, newer to the industry, have some experience in the industry for, a few years there. And that's going to help all of us just learn from each other. So we have some different tips and everything. So one of the first questions I have, which Mike, you kind of helped just answer this, was how do you find DI clients in your current book of business? So what does your ideal DI client look like in that P&C book of business?
My ideal person is usually, I mean, if a young and a young person starting a business at the beginning, I explained to them that disability insurance is the hardest insurance to get, most difficult insurance to get. And so you want to get it when you're young. Yeah, and so that sets up that sense of urgency that they need to do it now. We also put down their expenses and what needs to be paid in their business plan. And that brings in the overhead disability conversation. And so that's really what I'm looking for is the new, like I said, new arborist, a new landscaper. They have the equipment payments, they got to cover them so that stuff comes right into play.
Yeah, I usually like to say that disability is just different. It's not difficult, but I really like how you present that because you show the urgency. We absolutely need to talk to our clients when they're young, when they're healthy, rather than waiting because it's the cheapest, right? They don't have any health history, medical issues to get through underwriting. So that is a great time to start. Ross, how about you? When you look at your P&C book of business, do you have an ideal client that you talk to or?
Yeah, I mean, I would begin by echoing what Mike said. I think the most ideal client tends to be business owners. They seem in terms of being receptive to the conversation, that's the highest percentage, I would say, in terms of being receptive, and they have an inkling without an employer behind them with workers' comp that it's something they probably should have in place. But I would go in probably a more broad direction for me. And I would just say when I've gone through a P&C process with someone, we use the term ideal client all the time in our office. Like for us, an ideal client, one of the characteristics they would have is that they want to be advised. We live in a marketplace where insurance commercials are on TV all the time, and it seems like everyone's pitching price and convenience. And I feel like we can fall into a trap where if that's all we're talking about to people, how do you pull in like all these other things they're probably not thinking about if they're just thinking, oh, I want to spend 15 minutes and I want to save money. So for us, a real characteristic that we look for is, did they want to be advised? Were they willing to consider something other than an apples to apples comparison on their P&C? If someone shows that they want to be advised and they see the value and what we can provide to them as an independent insurance agent compared to going online and getting a quote, to me, that's a right person. We try to ask every single time, would you like to do a life insurance review with us? Would you like to do a disability insurance review with us? And so it's simple for me, but I try to ask every single time on that type of client and to make them aware that we offer those risk management solutions as well.
I think that's a great point. And we're hearing so much, especially I know Karen and the other internal sales team, they've heard so much from our P&C agents this year that clients are shopping. I'm so busy doing, comparison quotes. My clients are shopping. I don't have time to talk about DI. Well, I think starting when you start with those clients and you're advising them, right, that that they're going to be a consistent P&C client with you. You've talked about the life insurance with them, disability income. The more policies you have on the books, it's proven fact that the more you are likely to retain them, right? So I wrote that down, and that's something I'm going to take away from this. Is something that we and the team can use from a P&C perspective is take an advisor type of perspective when growing your P&C book of business, especially those that are just starting out. So.
Yeah, I mean, a real shift I probably have made in the last 18 months is to stop taking orders from people, not viewing myself as someone who's taking orders, but to view myself as a guide and to make sure I'm guiding people through everything that they should be thinking about. I mean, worst case scenario is they tell me no, they raise an objection. Sometimes they say no, and you still might be able to work through whatever their objection was because it's just misinformed. But yeah, if we just sit back and wait for people to ask us, most people aren't even thinking about disability insurance. They're not going to ask us about this.
Absolutely. Or if they do ask about it, usually it's because they're already disabled, right? They have some sort of major health history. They need it. Have a pending surgery or something along those lines.
So
the proactive approach. That's what one of our longtime regionals, our regional who used to work with us, but still a good partner. He always said you have to ask to GET. And I know I said that on our April forum too, but it's so true, because if you don't ask about it, they're not going to ask you. So I think you both have a fantastic approach with that, with your clients, and having the proactive approach there. So, and I like from our conversation that for both of you, really, it's every client that you're talking to. Younger is better for sure. But as far as the ideal client, it's everyone in your book of business, that in your current P&C book of business, as long as they're still working, they're not currently disabled, there's still opportunity for DI with them. It just depends on what that plan design might look like, or what the underwriting process might look like. So great points there. Is there a certain way that if someone doesn't have disability income, a certain way, Mike, that you bring it up in the conversation? I know a lot of yours are small business owners, so you're kind of showing some of the business expenses there, but any other tips you have for ways that you bring up the DI conversation?
Well, it even sounds kind of crazy, but it actually isn't. So in the equine world, you have people that have animals that they love and they want taken care of, and they're taking care of them. And if they get sick, they can't do that. So it can be another avenue to present the need. You'd think those horses to some people are very, very important. So it develops into actually a very solid prospect to work with equine owners. They also have a lot of expenses.
Yeah.
So so a lot of times too, they've gone, and one of the things, and I want to bring this up, and I hope I'm not.
No, you're good.
Out of time, but a lot of people, like, for example, I got people that climb trees and do things like that, right, with chainsaws, right? And people with horses and all these different things. And people are like, in fact, I was helping one of the colleges locally, was doing some stuff with like a little micro farming, and they were in today, and we were doing I was helping them with a little class they were doing, and they want to know about insurance as part of their cost for they're setting up these little businesses. It's kind of a practice thing they're doing. Well, I brought up disability insurance to them, and I said, what do you think about farmers and why they need disability? So, I had actually, this brochure, okay, and I handed it around, and I said, do you think it's hard for farmers to get disability insurance? And because we work with machines and do crazy things, and people use chainsaws and stuff like that. And that Mr. B, that has to be the worst, right? I said, well, it's kind of not the total point. See, the point is, as a farmer, you have to almost use every part of your body to do the job. You have to be cognitive, you have to have all your parts, and if you don't, you can't do the job. That's why the disability is a little more pricey, because if I go and use the chainsaw, I'm actually a lot more likely to get hurt with it. I use it in my backyard to cut a tree down, and I don't do it every day. I'm not real good at it. And so I'm more likely to get cut. The thing is, I can go unless a tree falls on my head, I can go in and I can do my insurance job. It's not the same as the farm. So that's really a great way to explain it to your clients, why the cost is more. It's not because what they do is so dangerous, because in their minds, they know how to run that saw. They know how to do their job, and they really do. It's probably, look at what they do for a hobby. They're probably the skiing. will probably get them disabled. All right. Snowmobile. Okay. And that'll keep them from doing that job that they need all the parts of their body to do. So, when we're working with blue collar, gray collar disability products, that's where it's really needed, and that's why.
I like that you put it into perspective for them, right? We take a look at, okay, what's their daily occupation? What are their hobbies? What are their interests? Even talking about with equine, that some of those horses are like their family. So you're wanting to protect your family. Make sure that, if you're not going to be the one that can take care of them, you might have some extra money coming in to cover your business expenses. So you can hire someone else to come in that is qualified, is going to love them just as much, and put that much, focus in your business. So that works for both individual DI and business expense to show the need and the opportunity there. So that's really great. Ross, how about you? Any other tips that you had as far as how you kind of bring up the conversation for your clients?
Yeah, I'm gonna steal some storytelling illustration bent there from Mike. That's really good. I'm a simple guy, so like my bent is to have simple habits and to stick to them. And my simple habit is basically when I get to the end of a process, if they wanted us to review homeowners insurance for them because they're purchasing a house soon, I try to do an excellent job with whatever it is they ask me to do. And then whenever that relational touch is going to be ending, I take a look at anything else that we could be reviewing with them that we don't already have a policy in place for them. So I would bring up disability insurance with most of those people, unless I just have a real sense of like, it's just not the type of client that would even entertain it. And I just ask them, hey, I see we don't have disability insurance in place for you or for your household. That's something that I do as well within our office. When could we set up a time in the next number of weeks to talk through that together? I'm going to assume that they want to do that as the first kind of habit I developed. I'm not going to ask them for permission. I'm just going to try to lead them to like, hey, we should do this. Let's set up the time. If they deflect off of that and say something like, I don't think I'd be looking to do that soon, I'd say, oh, do you already have disability insurance in place? If they say, oh, I have something through my employer, or no, I don't, again, to me, it's like you just have to develop a confidence and a competence in like, what is your brief talk track so that you know what you're going to say based on what they say. And to me, it's just like using humor and charm to an extent, and just making them feel comfortable that they would want to keep talking to you about it. And a lot of times, they will say, I think I have something through my employer, but they have no idea what exactly they have through their employer. And so I just try to pivot off of that and say, hey, I think we should really set up a time. Why don't you contact your HR and get all the details about what you actually have, and let's talk through that together. So my goal is always to get a set appointment on the calendar. That's my bent. Is most people are afraid of entering into a conversation when they don't know how long we're going to be talking about this. But if I can get a time on the calendar with them to truly focus on disability insurance, I feel like I've got them on a really good track at that point where like I kind of know where we're going to head together.
Absolutely. And it's not giving them the option of, well, have you thought about disability income insurance? It's, again, back to that advising. I think disability income insurance is important for you. Let's take the next steps to review it. And a couple things there with the, excuse me, the homeowners. That I feel like is a perfect opportunity if someone is either just buying a home or you just got new insurance with you for their great time to bring up disability income. And we have that mug worksheet, which has always been very helpful, especially for P&C agents, that just talks through, if you get sick or hurt and you can't go to work tomorrow, who's going to pay the mug? I'm thinking about that mortgage payment I just took out, right? And keeping utilities on, keeping food on the table for my family. So again, the simplicity of it, that can be a very simple way to put it into perspective, Mike. Like, we were talking for the occupation, maybe it's for the life event that just took place. And then the other thing there is, I know the common objection can always be, I have coverage through work. I really like how, just really continuing on there. Because so many times I think I've heard, in the field that we can be guilty of once they say, oh, I've got coverage through work.
Oh, yeah.
I'm done. I walk away, right? I check the box. I ask the question. We're good to go. So just continuing that conversation. And do you feel like most of the time, I think there's always been concern that if we push too hard or we keep asking questions, I'm going to lose that client. What do you
Yeah.
guys think about that? Do you feel like that's ever a concern for you in your practice?
If they're an ideal client, no, I'm not concerned about that at all. I hopefully build a relationship based on value with them, where they've already seen the value that we have to offer. It's a fine line. I think eventually, I'm not going to then, if they, let's say they just keep putting up the objection, I'm not going to be bullheaded about it. I'm not going to like reach out to them again in 2 weeks and say, hey, but sometimes if they keep saying no, I'll say, well, I think this would be important, so I'd plan to check in with you again 12 months from now or 6 months from now and just kind of see where you're at on this topic. So I have not ever seen any type of trend of losing clients because I was seeking to play an advisory role for them. And if there are a lone example here or there, they probably aren't the best clients to begin with, because they're not actually valuing, again, it's not just cost, it's not just convenience. We understand coverage. We can build a meaningful relationship with them. We can give them a certain caliber of service. If they're seeing those other values that we have to offer, I don't know, people don't really tend to get frustrated if we're making this about value and not just about cost and convenience.
Perfect. Mike, how about you? Have you had any setbacks with that, or have any tips on that?
I was going to say, Ross, you hit the nail on the head. Absolutely. Because, a lot of times, I got to say, sometimes I'm not for everybody. And so I want you to have this to protect your business. You got to have a plan with this business. And if something goes wrong with you, and, we want to make sure your insurance is paid. We want to make sure your rent's paid. All that stuff's paid so you can be back in business again, and you're not out of business because of one little thing that happened, and you're out. And that's what we're trying to stop. Another product that property and casualty agents sell, is workman's comp insurance, and you know what? It's a lot of times very expensive, and it doesn't cover you when you're off the clock.
Right.
So and I really I had a disability, and it wasn't with Illinois Mutual. It was with Farm Family, but a guy had a farm stand and had disability policy that I set up, and he's closing down the farm stand for the in the fall, and he goes, I don't know if I'm going to do it next year. He says, I think I'm going to get rid of the disability policy. He said, well, I don't think that's a good idea. I said, it took us a while to get it underwritten. You got the coverage. So turns out he wasn't gonna do anything for the winter. He decided he wasn't gonna do it. Well, everybody always does something. So he's taking his recycling into his garage. He trips down the stairs and wrecks his ankle really bad. And all of a sudden, oh yeah, well, I was gonna snow plow, and he was gonna plow snow, and he couldn't drive the truck because the clutch, and there you go. He's disabled. So he never thought he needed, all of a sudden, let me tell you, claim time, I had to go out and help him do it because he didn't want to do the paperwork. And so, yeah, it was important. Believe me, I got yelled at and everything else, but, he got paid, and it was all good. But yeah, people tell you they don't need it till they need it. And I'm going to bring in one thing that, how's a good way to put this? 90-day wait is always kind of a sweet spot pricing, but I tend not to do that. I might do a ladder coverage approach where I'll do a 30-day wait on the business overhead expense and a 90 on the income. That can give them a little bit better pricing. You don't want your business expenses. You need those paid right away. You can't wait. That's, if you're If that stuff isn't paid, you're out of business. So you can't wait 30-day wait. If the young guy with that, to encourage him to get it, the return of premium is a great addition to solidify the fact that, you know what, someday I can get this all back because I'm going to stay healthy. And I sell, you know, there'd be nothing better. Of course, I won't be around, but to know that you're going to get that check back, get that money back. And it's a great value to have that, and it will keep them. You're actually helping saving them from themselves, because every year that goes by, they need that coverage more. As they get older, they need that coverage more. When they locked it in when they were young, and they can continue that and keep it, they need to. Thinking they're going to get the money back will help them pay that bill, and so that you know that they're going to be taken care of.
Absolutely, Mike. You made some really great points there. First off, with the workers' comp, there's a lot of states, depending on the state that you're in and what the rules are for that state, where the business owner can opt out of the work comp. Well, I always encourage our P&C agents, especially, to have the conversation for individual DI and business expense at that time, because generally you can get both products for cheaper premiums, better coverage on or off the job, accident or sickness. So it truly, if they're opting out of that, there's a perfect lead in to the conversation for individual DI and business expense. And then I'm glad you brought up the plan design as far as what your common plan design is, because, and Ross, I'll have you give you some feedback on that too in just a minute. Return of premium rider is huge for us at Illinois Mutual. It's on almost 50% of our policies, just under 46%. And it's a big selling feature, especially for small business owners and for younger clients. They love the idea of getting all their money back if they never use it. And the younger you are, the cheaper it is, right? It's very affordable for that plan design. And a lot of our clients are paycheck to paycheck. We're middle market, so we do see a lot of clients that are paycheck to paycheck, especially as they're just starting out in the business. So that 30-day elimination period is a great option. But if they can stretch it out to 60 or 90 days, helps get the cost down, and you can build maybe a longer plan design to meet their needs. But Ross, did you have any any trends that you see with your plan designs, or you try to personalize it to your clients? Or
yeah, we have a process where I would say we try to have about a 15 to 20 minute conversation. We call it like a discovery call or discovery appointment, where I do a blend of gathering information that I would need to be able to build an accurate DI proposal for them, and to almost give them a disability insurance 101. I believe in really having the heart of a teacher when it comes to this kind of stuff. So I try to keep it 101 level, but I really strive after that discovery call that they would understand, an elimination period, a benefit period, what are the basic aspects of any disability insurance policy. And I certainly make recommendations when people, when they learn about that, sometimes they can then connect it to their own finances, their budget, their debt, whatever it may be. But I find that when you take the approach of having the heart of a teacher, you are more able to then customize a proposal to some extent to kind of fit the client's appetite and bent. And I probably would do the same thing as Mike. If I didn't necessarily have all those insights, I probably would lean towards a shorter elimination period. But what I've found is the more I've done that with clients, the more time people are actually very comfortable. Again, I put this in risk management terms to them. They will really like the 90-day or the 180-day elimination period, because they understand I'm self-insuring for this period of time, and then I'm saving myself money on the premium. It might actually make them more prone to wanting to go through the application because they understand how they can control cost a little bit. But I make sure that they understand, hey, if we're doing a 180-day elimination period, let's just be clear what that will mean in reality. I'll just ask, hey, do you think you'll have 6 months of expenses set aside somewhere that you're not going to touch unless it's a worst case scenario for you and your family? That being said, one rider I then like to mention to people is the RIB, the retroactive injury benefit rider, which is, hey, I think that's a perfect complement to a 180-day elimination period, where hey, it doesn't cover illnesses, diseases, things in those categories. But if it was an injury, hey, we can kind of, after the elimination period is satisfied, we can kind of get you back pay for that whole 180-day elimination period, once that's satisfied as well. And I find that combination is really successful. A lot of people will then want to go with the RIB. I also almost always include the GIO, where they can add more coverage in the future to the policy. It's super cost effective. Almost nobody ends up declining that if I explain that with an appropriate amount of detail.
Absolutely. And I always love the GIO too from an agent or advisor perspective, because it allows you to do 5 reviews in the future, right? Every 2 years.
Yep.
Not only can you help them with DI, but do they need more life insurance? What's going on with P&C?
Yep.
What else can you help them with? So,
well said.
So that's those. You guys basically took the words out of my mouth as far as what I would suggest for a plan design. So you did great there. And then the other thing, you also mentioned, Ross, was the like the tract. Basically you kind of have you're doing the discovery call, learning a little bit more about them. And it goes hand in hand with kind of what Mike said, as far as putting it into perspective of, their likes, their dislikes, what they're doing, in their free time, their hobbies, in addition to their business. So it's just learning a little bit more about your client and then putting it all into a package for them for why and how DI is going to help support them and their family. So it doesn't have to be rocket science. I think that's what I'm learning from today from you guys, is the simplicity of it. It really can be simple to bring up the conversation.
That was a real mental barrier for me in my first year. I was like scared of this product for the first year because I perceived it to be more complicated and difficult than what it was. And I had to stumble through a couple of applications where I didn't fully even know what I was doing. And partly you just have to force yourself to do it. And then you eventually are like, okay, you get your process down. If you can get a proven process down on paper that you can follow each time, then it gets a whole lot easier.
That's a great.
I would just want to mention that the team at Illinois Mutual, I heavily rely on the inside sales team. That was another piece that really helped me, where I didn't fully understand at first just how much they were able to do in partnership with me. And when I could kind of rely on their expertise for certain things and keep myself in certain lanes of the process, that's where I felt like I got better overall as well. So if there are people that are on the call today and you just kind of have a bend of like just getting on the website and trying to tinker and do all of it yourself, I would suggest giving it a try next time, of just calling the DI sales team at Illinois Mutual and just saying, hey, here's what I'm trying to do, and just let them explain to you the services that they can provide to support your efforts.
We didn't even pay you to say that, did we? No,
that's made me a lot more successful, to be honest, is just realizing, I just didn't realize how much of a resource was there.
Yeah. And thank you for saying that, because that's one of the things that we always, when I used to be regional manager, and I know we all promote this in the field, especially, is you don't have to be the expert at DI. You have a team of experts here in the home office to help you every step of the way. So, and I think another great point there is the first couple apps that you submit, you might feel like you're fumbling, you don't know what you're doing, but then the more once you get a couple under your belt, you're going to feel more comfortable, more confident, you know what to expect. And then it makes it easy. But I feel like so many times, and it's sad, trend in the industry, that we submit that first app, it doesn't go the way we expected it to, and then we're done with it, right? We forget about it, cut it off, and that's it. So I think, like you said, for those of you on the call, if you've submitted a first one and maybe it didn't go that well, stick in there with us, take the next step and, do another one or two, call the team for support, because, Ross is 3 years now, Mike's a number of years in the industry. And as we were talking before the call today, the DI product and just the insurance industry altogether can be very profitable and just a great way to, a great lifestyle. Great way to build your book of business and income there. So one other question I had before we turn it over for Q&A is struggles. So what kind of struggles do you see in your business, as being P&C agents, either whether it's adding disability income to the portfolio? A lot of times we hear that there's just no time, so anything that you guys have experienced, whether with bringing up the DI conversation.
Time is, you got it. That is in the PNC world a constant issue. You're getting pulled from all different directions, and you have to look at it almost as you're on a mission to help folks, and it's that important. And you want to make sure that they have as many things covered as they can in a thoughtful way, and get it put together. And so you got to make the time, and it's not easy. It is not easy. And it also, just going back to what Ross had said, you folks at Illinois Mutual are great to work with. I get thanked, and that's important. That feels good. And when we do business with you, Karen gives me little calls to remind me that, hey, Mike, you quoted this, and you're working on that. Keep working on it. It's like, thanks. Because with the time that we get jammed up with stuff, sometimes that folder goes kind of a little further back on the desk, and Karen's call really it brings it back to the front. I make a phone call, and guess what? It gets done. So, and I know that's. I wish I didn't need that, but thanks, Karen. It's good. It's good.
Partnership, right?
Yeah, it is. It's terrific.
Good. Ross, how about you? I know we kind of talked about bandwidth sometimes. Just having the bandwidth.
Yeah, I mean, time is always, I think, one of the bigger things, and I think I alluded to this earlier, but to me, there's a real mental hurdle sometimes when you're already working with a client on something else, to feel like you have the mental or physical margin within your calendar or in your mind to try to immediately transition to another conversation. I know upsell, cross-sell, words we hear all the time within the industry from lots of different places. I feel like I have found some pressure release valves by developing habits of looking for those opportunities, but scheduling something in the future versus trying to rush myself or them to discuss it and to do it justice in the present. So I find that as my margins get slimmer and slimmer, it doesn't sound very sexy, but like, good tools are really important. So I am maniacal about my calendar. I use a lead management system for all the different type of leads that we have. I always know what my next step is on any type of lead, whether that be disability insurance or something else. It pops up. I know what I should be doing today. I can look and see what I should be doing tomorrow. I can see what I'm past due on. We've developed ways where when people are interested in certain things, but we haven't booked that next appointment, we still believe in picking up the phone, and we strive to call people up to 3 times, but we have automated texts and emails that we have crafted that will go to people at designated times. So, I mean, there are ways to work smarter and not harder at times. And to me, a lot of this just comes down to building good habits and using tools effectively as well to make the most of your margins.
Perfect. I know Jeff has a couple questions for you guys too, so I'll go ahead and turn it over to Jeff now, and I'll stop talking. Not one more time, Jeff. I'm sorry, I'm not hearing you yet.
Can you hear me?
There we go.
Okay, cool. Yeah, this is more of a strategy question for you guys. When you're presenting to small business owners, of course, we have the individual DI that covers what they pull out of their practice, and then the business overhead expense. Do you typically try to present both of those in tandem at the same time, or do you lead with one product based on your conversation and then pivot over to like the BOE, if that is a possibility as well? What's your thoughts on approaching both of those and from a strategic standpoint?
You want me to go?
Yeah, go ahead, Mike.
Yeah. So
Yeah, go ahead, Mike.
So the overhead seems, in my mind, almost easier to have the conversation first, because you're talking about expenses, and then say, once you got that, geez, you want to eat? I mean, groceries are a good idea, right? So and then and you want to live in your house, and so you probably want your mortgage paid. So that you can go, but you're talking about business, stay with business, then go to the personal. It's kind of how I work with it. Yeah. And of course, every situation's a little bit different. But that's kind of the way I would do it. Did I?
Russ, same strategy?
I would be honest just to say that I've probably done BOE on 1 or 2 occasions, and it's probably a tool I'm more looking to add to my toolbox moving forward. So when I was talking to Mike before the call, I would point us towards him today to be like, he's probably more of the guru on BOE at this point of time compared to me.
And you're not alone there, Ross. I feel like that's consistent, where we have the challenge of finding the time to add the disability conversation, and we're like, we got there, yay, we did it, and kind of forget about the BOE opportunity. So we work with so many small business owners at Illinois Mutual, but need to do a much better job of talking about the business overhead expense as well. So Jeff, that's a great question, just for how to transition the conversation. And I know for a lot of P&C agents that we talk to, the focus is targeting business owners, right? That's how you look to grow your business. Business overhead expense can honestly be the door opener for that new business owner to come to your practice. So just think about that for how you're looking to build and grow also. Jeff, do you have any other questions?
No, that's it. Thank you.
Yeah, thank you.
I just want to put a kind of a neat emphasis on the BOE. It was a product that was really designed years ago for physicians and dentists that had a practice, and it's really cool that it's there for the working guy. It really is. So I don't know if I lost you guys, because I can't.
Nope, I can still hear you. Can you? Yeah.
Well, my screen went black. I don't know what. Did I break something again? Oh my gosh. Yeah, it's like my equipment gets disabled. So anyway, I just think that's really a cool thing, because it's great that the dentist, I get it, the medical practice, not anybody can jump in and do it, but really, that landscaper, not anybody can jump in and do that job either. They need that protection. They absolutely need it. And so it's great that there's a product there that does it today, because it's, I think, relatively new in the blue collar world.
Well, and think about how many small business owners that you work with, especially just starting out, that it's a 1 or 2 person operation. If that business owner isn't there doing the everyday job, that business is going to fall apart, right? They're going to be so far behind. How are they ever going to dig themselves back out of that and have a business to come back to once they recover? So to know that they have business overhead expense to keep the doors of the business open, they can keep the bills paid while they're getting recovered, that's a huge peace of mind. We live in Illinois, and just last week we went from 50 degrees to 91 degrees, and with over 100 heat index in a matter of a week in May, which is unusual. And my dad owns a heating and cooling business, and so he was working from like 7 in the morning until 10 at night. Was so far behind, and everyone kept calling like, "Hey, can you get here? Can you get here? My AC is not working." And he's like, "I'll get there as soon as I can." But so for him, especially last week, if something happened to him, his business would fall apart. He couldn't pay his bills because there'd be no money coming in, right? And he'd lose all of his clients. So I think that was a very big eye opener for me, just about how important business overhead expense is, even though I know that, on a regular basis. So Kind of, again, putting it into perspective for your clients. If you know what type their business is, how busy they are. And Jeff, I know something we've always said in the field is when you talk to that business owner, ask them when the last time they took a vacation was. Right? That's always a big one, because they're like, I don't have time for vacations. I'm too busy. Okay, well, what if you're forced to take a vacation? So that's always kind of that good lead-in question too. Before I start with the Q&A, I do just want to give a quick plug. I'm going to share my screen here to make sure everyone on the call, can you all see my, the PowerPoint slides?
Yes.
Yeah. Okay. Thank you. It's a little funky here. Okay. So the biggest one is in the second quarter, we have a bonus boost going on, which basically, to qualify for this, if you qualified for a quarterly incentive level in quarter 1 of 2022, you have to get to the next level or qualify for a higher level in second quarter, and you'll earn not only that quarterly incentive bonus, but you'll also earn a 20% boost or bonus on your second quarter paid premium. So kind of to break that down a little bit, because it can get a little bit complicated. If you didn't qualify for a quarterly incentive in the first quarter, you have to meet at least level 1, which is submit 2 apps for $2,000 in paid premium in the second quarter, get those paid for, and you'll earn a $300 level 1 cash bonus plus that 20% bonus on your second quarter paid premiums. If you did qualify, let's say for level 1, 2, or 3, you just have to get to the next highest level in second quarter, and you'll get that bonus plus a 20% boost. So that's a very lucrative additional bonus that we have going on right now. I know for some agents, we're seeing, between an extra $400 to $1,400 just based on their paid premium today, not counting what they're working on to get submitted before the quarter. I know we have until the end of June for that. That's submitted and paid for. And then also for May, hopefully all of you know this, we have May is DIAM, which is Disability Income Awareness Month. In the month of May, for each disability application that you submit in the month of May that gets paid for and issued by the end of July, you earn a $100 cash bonus per application. So again, if you're working with a small business owner, individual DI and business overhead expense, that one client can get you 2 policies and get you qualified for an extra $200 with those 2 policies. The key there is the minimum annual premium has to be $200 in order to qualify for that bonus. So if it's only a $100 annual premium, you won't qualify for the bonus, but it would count towards the quarterly incentive and that bonus boost. Okay. And then I do want to show, make sure I'll leave this slide on the screen for quite a while here, but this is our contact information. So I know everyone's all across the country here, so at least you can see who your regional managers are. You've got Jeff, Dave, and Jim. Dave's in the central region and Jim's in the western region. And then the internal sales team. And again, these are great partners for you. You've got Karen in Eastern region, Carrie in Central region, and Erica in the Western region. And as you heard from both Mike and Ross, your regional and your internal sales rep truly are your partners in this business to help you grow. We want to see you succeed. We want to help you every step of the way to be the experts for you and help overcome those objections so you can make DI a part of your everyday practice. So with that said, I'll go ahead and turn it over. We'll start off with the questions that were asked. So what is the RID rider? And that's Mark Russell had asked that question, and that's actually the RIB as in benefit. It's the retroactive injury benefit rider. And how that works is you can add it to the policy, the individual DI policy. If the client gets disabled because of an injury, once they meet their elimination period, we go back to day 1 of that injury and we'll pay them benefits for the waiting period. So it's kind of like it's day 1 injury. So if someone's used to group coverage where they get first day accident, 8-day sickness, that's going to be what that rider is very similar to, but it is only for injuries, and it kind of helps get them reimbursed for the elimination period. So if they had to wait a little bit longer and maybe couldn't pay some bills during that time, they'll get a lump sum once they get to elimination period to help make up for some of the expenses they couldn't pay during that time. And then we had questions here as far as can individual DI be offered to business owners? Absolutely. So for every client you talk to, individual DI is going to be available as long as they're working, not currently disabled, rely on their paycheck. Business overhead expense is only available to those small business owners though. But for a business owner, you can write individual DI and business overhead expense. And then one of the questions was, what's the maximum duration of DI benefits once they start on disability? So This policy is guaranteed renewable to age 67. As long as you pay the premiums, the policy is going to stay in force all the way to age 67. But for each client, you can choose a benefit period that they apply for with their policy. And our benefit period options are 6 months, 1 year, 2 year, 5 year, 10 year, or age 67. Some occupations have some restrictions there, but with that, the benefit period, once they go on claim, they can receive benefits up to their benefit period. So if I have a 2-year benefit period, I'm on claim for 6 months for a broken leg, I get recovered, get back to work, start paying my premiums again. My policy stays in force, right? Because I'm going to go back paying my premiums. And then 5 years later, if I need to go on a new claim for an illness this time, new claim, new elimination, new 2-year benefit period. So hopefully that kind of helps there. We do have the opportunity for, or the option for online quotes and applications. So we have our agent forum. If you're not a member of the agent forum, I encourage you all to get registered, and you can run your own quotes if you want to. But again, just like Ross said, he uses the team, or has used the team in the past to help with quotes. Don't hesitate that if you're running a quote, you can always call the team. They can swap in and see what you're doing. So we can walk you through step by step, every step of the way to help answer questions, get you more comfortable with it. And the same with submitting e-applications. We do have an e-application platform, very seamless. We're seeing a lot, an increase there in the number of agents that are using that, because a lot of clients, they like the electronic option. And again, the team can help walk you through that step by step as well to get comfortable. And then, so this was a scenario that was presented as far as if someone's taking high blood pressure medicine and they became disabled due to having a stroke because of that high blood pressure, or they were paralyzed because of that high blood pressure, or because of the stroke, while a disability policy is active, are they covered? So that's a great question. Kind of multiple levels there. So if when they're applying for disability income, if they had high blood pressure history, as long as it was controlled and stable, there's usually not any exclusions on high blood pressure there. So they would have coverage, we're good to go. Policy's in force. Then if a few years down the road, they go on claim and it was found to be because of high blood pressure or something along those lines because of a stroke, it wouldn't have been excluded during the underwriting process. So it would be covered once the policy is in force. So hopefully that kind of helps there. Now, let's say that someone is, let's look at our landscapers. They had a shoulder injury or knee injury, and we had an exclusion there. Once the policy is in force, if they were to get disabled and needed a knee replacement or throughout their shoulder, something like that, they have a surgery there, that would not be covered because it was already excluded on the front side. So hopefully that kind of helps put it into perspective there. The maximum issue age, it's 18 to 60 for individual DI and business overhead expense. So once they turn 61, they're no longer insurable to get a new policy. But this product is guaranteed renewable to age 67. So as long as they paid the premiums, it's going to stay in force all the way to age 67. As long as, and once they took the policy out prior to age 60. Okay. And Frank, I know you had asked this is going to be recorded. It is recorded, and the goal is that we will be able to share it. We had a session in April, and unfortunately the recording was corrupted, so we weren't able to share that with anyone. So I'm hoping, fingers crossed, this one's going to work. We're not going to have any technology issues, but I think that's all the questions we had. Oh, I'm sorry, I have one more here. For prospects who are older or may not qualify, would you suggest an accident plan or a hospital indemnity plan, ER plan, etc.? That's a great question. So we, for those prospects who are older, over age 60, and they're not eligible for coverage, definitely we would encourage you to find a product for them to get them something in force. Unfortunately, at Illinois Mutual, we wouldn't have an option for them. On an individual DI basis, our max issue age is 60 years old. And then once they're over that, we don't have any individual products available for them. And then Jim had a question about simplified underwriting for business owners and a discount. Great question there. So for simplified underwriting for business owners, we can go up to ages 18 to 50, applying for benefits up to $5,000 per month or less. We don't require any exams. So you'd have to ask medical questions, but no exams are required. Ages 51 to 60, up to $3,000 per month is non-medical, meaning no exams. Now, from a financial perspective, for more simplified underwriting, we go up to $3,000 per month without needing tax returns. Over $3,000 for any age business owner, we have to have the last 2 years tax returns. So that's kind of a breakdown there for how to do simplified underwriting. And then as far as a discount, if they purchase both individual DI and business expense at the same time, they qualify for a 5% discount on both policies. So that's a nice little benefit there. And for business owners, we also have a business owner upgrade, where if they've been in business for at least 2 years, earn at least $30,000 net income the past 2 years, they qualify for a business owner upgrade to get them a discount in their premiums, basically give you the next best occupation class rate. So that's always a great way to save premium dollars and maybe get more benefits too.
Andrea, Mike Berlon, you brought up something that could be an obstacle, is the exclusions on a policy. And so, you know, the landscaper who gets the policy with the back exclusion, and, you know, well, gosh, you know, Mike, if I become disabled because of my back, I'm not going to be covered. I don't think I want the policy. Yep. And, you know, I'm going to tell you something. What one is, you know, I explained that, well, that's if it's degenerative. In other words, if your back breaks down, well, you work with that all the time anyway. You do it all the time. You've found a way to do it. You're still doing your job. If you're in an accident and you know, you fall out of a tree onto your back, it's going to be covered. You know, you broke it. It's, you know, so that would be covered. And the other thing is, you got a lot of other parts that break.
Yeah.
And so so you want that covered. So, you know, that don't. Yep. And this happens with a lot of newer folks, you know, and I know I'm the old son of a gun. I keep bringing it up, but when you're new in the business, a lot of times you think, oh gosh, this is terrible. You know, why would some, you know, they don't insure anybody, for God's sake. They put exclusions on.
Yep.
Well, you know, that's why you want to work with the younger people to get them started before a lot of the things break down. But also be aware that being able to get coverage is good. And don't let one little thing keep somebody from getting coverage. Don't get on there, talk them out of getting it. Keep focused on putting that contract in force, because you know what, something else can happen, and will, more than likely. You know what, the statistics are really on the side. You know, it's like 1 in 1,000 houses ever burns down, but you know, like 1 in 3 people becomes disabled before they're 67 for a decent period of time. So you know, I don't even think, I think automobiles, it's like 1 in 100 cars actually gets totaled. So you know, you're looking at pretty high statistics that someone is going to get hurt and not be able to work, and you want that coverage there.
Absolutely. Ross, do you have any tips as far as how you present the plan if there's an exclusion?
Yeah, I alluded to the fact that I kind of bungled my first ever DI application. It's basically exactly what Mike's talking about. I didn't necessarily understand what could be coming my way in terms of exclusions. And the phrase I would use is expectations management. So I learned through failing forward that if you ask good questions on the front end and you talk to the inside DI sales team and you say, hey, I already asked them 15 high-level medical questions that took me 3 minutes to get through. Here's what I'm aware of in their medical history in the last 5 years. What should I be previewing with them when I come back to the proposal? I want them to know right up front before they even apply what exclusions are possibly coming their way, so that I frame this in the right way. And then I do what Mike said, which is, hey, yeah, we might be dealing with 1 exclusion or 2 exclusions here, but there is hundreds of other things that could happen to you. This is still a really valuable thing for you to consider. I just didn't have that on my first go through the process, and I basically learned through failing that I needed to do better at that moving forward.
So many great points there. The field underwriting on the front side, I think, is a huge component to success with DI. You know, just asking some more questions and not being afraid to ask those medical questions, you know, about health history. Sometimes, unfortunately, our clients, they're not going to be honest with us, and that's probably rare. That's fewer and far between, right?
Yeah.
Again, a lot of times if you're working with clients that they're looking for you to be their advisor, or for you to advise them on the next best things, they're going to be honest because they want to make sure it's going to be good for everyone. But the field underwriting and then working with the team to say, hey, okay, here's what I learned. What's this going to look like? You know, so then you're more prepared for the underwriting process. You can prepare your clients. And again, as you talked about, the get a few under your belt, the more comfortable and confident you become with it, you're going to know, oh, hey, someone's got a back history. This is what we're going to be looking at. You won't even have to call the team on that, right? You become kind of that expert there. And then there was something else you said there. And Mike, I thought about this when you mentioned that there's so many other things that can happen. Number one, going back to your example of the client that was the farm stand, you know, he was worried about getting disabled while farming, but he was taking out the recycling and fell and, you know, got disabled. So it can happen anywhere at any time. And one of our attendees had made a point that illnesses are so much more likely to disable people for longer term, you know. In our business, we do see a lot more accidents because we have a lot more manual hands-on occupations, but our average claim time is 366 days. So it's getting those clients that we see the disabilities, they happen, but they're maybe not the catastrophic we all think of, you know. But a lot of, you know, if I didn't have a paycheck for a year, I wouldn't be able to pay my bills. I'd probably lose my house, all the things. And that's consistent for most of our clients, right? Well, I have a disability policy, so I'll be fine. But most of our clients, you know, that would be the case there. So you want to make sure that we're helping them understand it's not necessarily the catastrophic that we're protecting for. It's making sure that you can get recovered from a 3-month, 6-month, a year disability. So I'm looking to see if we have any other questions. And Robert Stoltman made a great point and Mike, I think you kind of alluded to this too, is it's great to be able to have a policy issued regardless of having riders on there. So you got through underwriting, you have coverage, even if something's going to be excluded, you got it for everything else. And that was the other thing I was thinking of is an agent I met with a number of years ago, he always presented it as like the salt shaker example. He would take that salt shaker and would shake it across the desk basically. And he'd take out one piece of salt and say, all right, this is your knee that's not covered. Every other piece of salt, it could be any other illness or accident that could happen to you. So that's all going to be covered. And I'm like, well, it puts it in perspective. So, all right. We had one more question that just came up. And what do you see as an average DI premium? I always like to say if you can keep the premium at 1 to 2% of your client's monthly income, that's what we find will sell in the middle market space. And I think Jeff, you know, very consistent with every client you talk to, 1 to 2% of their monthly income is what we find will sell in the middle market. But Illinois Mutual, our average premium is about $1,000 to $1,500 annually that we see there, just depending on kind of that plan design. All right. Well, thank you all. Thank you, Ross and Mike, for your participation today. I learned so much from you and got a lot of good takeaways there that I'm going to use in my discussions with advisors and just kind of in practice there. We really value your time. And for all of you that attended, thank you so much for participating. I hope you learned from Ross and Mike also, and we're going to take this back and sell some DI, right? All right. Great. Jeff, thanks for participating, and you all have a great day. We'll talk to you soon.
Thanks.
Thank you guys. Appreciate it.
Bye.